We're back with part 3 of our conversation about questions or statements that advisors wish every investor knew. So we're going to get back into it this week here with Phil on Phil's Tax Hacks and Other Retirement Facts. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist Phil Putney. Now let's get rolling with today's show. What's going on, everybody? Welcome into the final episode here of our 3-part series on questions and statements and comments and things that advisors wish investors knew, not only just to understand what it is that they are involved in, but also understand the advisor's point of view and just things that would be kind of make the process a little maybe smoother or easier or whatever. But in general, it's just good information to kind of know as well. So we're going to talk about that with Phil this week. We're going to do our final 4 statements or final 4 pieces to talk about. Phil, what's going on, buddy? How are you?
Doing really good. Doing good.
Yeah.
Hanging in there, ready for the month of November up. So yeah, Thanksgiving's.
I was going to say, yeah, ready for Turkey Day. I think we might be dropping this either right before or right after Turkey Day or right on Turkey Day. Maybe. I'm not sure.
Yeah. As soon as that happens, the year's almost over. So.
Oh man. Yeah. And that's my favorite holiday too. I mean, I love me some turkey bird. So that's my favorite holiday, but good stuff. But let's get into our final questions here. We got 4 more we want to finish up here on this 3-part series. You wish everyone knew truly what they're paying inside and for their investments, right? We often hear stuff like, my guy or gal charges me 1%. That's all I pay, and it's like,
right.
Cool. And it's like, yeah, okay, maybe that's the advisory fee, but what are you truly paying for the various investments that you may have?
So, I mean, ultimately that is maybe to your point, what they're charging as an overall advisory fee. But then beyond that, what are the costs internally of the investments? For instance, mutual funds, what's that internal cost in a mutual fund? In a more actively managed mutual fund, you can easily pay 1% or more just for that active management that's happening inside the mutual fund. Now, granted, that's kind of I don't want to say a hidden fee, but it's not a fee you're going to see, right? It's built into the cost of the portfolio. It affects the returns ultimately, but it's not something that you're going to see on your statement on a monthly or quarterly basis of, well, this is that advisory fee. So it's important to understand both sides of that equation when you're looking at what the true costs are of the underlying investment. It's not just what, quote unquote, the advisor is charging. So understand how they're getting compensated for sure. But then understand also what are the underlying cost of the portfolio from the fee standpoint, but even beyond that, just the other costs associated with certain investments. I mean, again, back to mutual funds, one of the, I don't want to say the hidden cost, so to speak, that isn't a fee even, is just structurally how they work, with having these capital gain distributions and different things happening inside the fund that ultimately affect you from a tax standpoint that has an effect on the net long-term result of your portfolio. So it isn't necessarily a fee that you're seeing, but just structurally how that works can dramatically change your end result. So, so our world is unfortunately can be complex. There's a lot of moving parts, but it's, I think, important to understand a little bit about how those work. And hopefully your advisors help maybe explain some of the ebbs and flows and why they're using maybe one product over another.
It's a weird industry because it's not super complicated to build and develop your wealth and even to do the basics of preservation and distribution, but it also is incredibly complicated. It just depends. I guess maybe any industry is that way. It just kind of depends on how far you want to take things, right? So I think finding an advisor that helps you keep it simple for, and for how you feel and how you want to react to it is very important as well. And certainly understanding, that component of it, the fee portion is very important, as well as this next one, Phil, which is risk. Truly understanding what risk potential does to the portfolio, because it's easy to go, I don't want to have any risk. I don't want to take any risk. Get me out of everything risky. Well, you can't really do that realistically because you're never going to keep up with even basic inflation.
Yeah, I mean, it's at the end of the day, you're going to need some risk in the portfolio in retirement. Hopefully, you're going to be retired 20, 30 years, right? So during that time, you're going to experience inflation, and unfortunately, there's no risk free or low risk product that over a long term period of time keeps up with inflation. It's just that's not what they're designed for. Money in the bank, right? I mean, it's we're getting 5% or we're getting 5% in CDs and money market accounts, which that was great, but what was inflation? Well, it was at that point 7-8% or more, right? So it's just historically that's not what they're designed to do. They're for safety, security, having liquidity. So
Hmm.
risk is a key part of designing that overall portfolio to understand, first of all, what is your comfort level, right? Because we don't want to have a client invested in something that at the downturn is beyond their comfort level, where now they're going to just
Right.
be too uncomfortable and want to get out. So it's important as an advisor to understand and kind of gauge that up front and have that discussion with a client up front to know that, but then also to educate on, well, how do you position risk? So yeah, you need risk, but that doesn't mean that everything should be risky either. You need to have a balance between those less risky type of assets and the more risky type of assets. And we've talked about this before and kind of our structure with that bucket strategy now, soon and later, where we're positioning risk based on time.
Yeah. Yeah,
So
and a risk is a fickle monster because
yes,
it's going to change through the years, and we're always going to have that feeling of, oh man, I missed out on something. I should have been more aggressive. Or I should have taken more risk, or then we're going to be like, oh, thank God I didn't take risk because such and such happened, right? So it's always going to have this kind of back and forth thing. So truly understanding its potential and the potential to do damage, especially in the early years of retirement, the first few years of retirement in a down market or a bad market, and being exposed to too much risk could cause a lot of problems later on. So, and there's plenty of scenarios out there. We've done conversations on that sequence of risk return, all that good kind of stuff. So it's important to really truly understand that. And if you don't get that when you're talking with your advisor, have them explain it to you. And if they explain
right.
it to you, you still don't get it, ask them to explain it again. There's nothing wrong, right? Like Phil said,
No,
questions are good. So, and
yeah, and
speaking of
that really
questions,
should be
Phil.
part of what
Oh,
your
go ahead.
advisor is doing is helping to balance that out to make sure you know risk and what truly is the risk you have in your portfolio ahead of time. You don't want to get into a downturn in the market and say, "Oh, I didn't realize that the potential for a 20 to 30% drawdown was there." That should be a discussion you had up front to say, "Hey, this is what it looks good today, right? Everyone loves to ride the wave like we've seen over the last year." But at some point, when markets average a certain number and we earn well above that number, you borrowed future returns is all you've done. You're going to be given those back. It's just part of investing. So
Yep.
understand that ebb and flow up front and what your tolerance is so that you're not getting into a position and making then an emotional wrong decision at the wrong time.
Yep. Well, yeah, that was on this list as well, right? So they all kind of
Yep. Yeah, we
kind
talked
of
about
go
that.
back
Yep.
and forth within each other. All right, so let's talk about the internet for a second. And since
Mhm.
we'll be hypocritical because we're on a Google product
We're
right
on the
now on
internet. Yeah,
YouTube. If you're checking this out, yeah, we're on the internet. We're on a Google product. If you're watching us on YouTube, but think about and it's not just the Google searches or any search, right? The motivations behind a lot of stuff on the online world now
yes.
is not the same. There was a funny South Park episode a couple of years ago where they were talking about they were kind of poking fun at the fact that it's almost hard to tell sometimes now, even on news websites and financial news websites and things of that nature, articles and stories that are actually designed and hidden as an actual sales piece
Yes.
versus an actual objective educational thing, right? So
Right.
it's
Right.
understanding what is sales and what is educational, and that line is super duper blurred now. It's really hard to
Sure.
decipher if you're not watching out for it. So you got to be careful when you Google search something or when you look up something. Is it pitching you a product or a solution,
Right.
or are you the product or the solution?
Right. Yeah. I mean, at the end of the day, that's I say when you're looking at any resource that you're, getting your information from, understand what their purpose and goal is, right? I mean, network news, so to speak, to kind of to talk about them to begin with. I mean, yeah, they're giving us news, but at the end of the day, what's their final goal? It's not to give us news, it's to sell advertising. I mean, they're a corporation trying to generate a profit at the end of the day. That's what it is. So how do they do that? Well, it's got to be sensationalized. It's got to, draw a lot of views and attention So that's what they're doing, is drawing that attention. And that's why on the news, typically you hear about, maybe some really good things or really bad things, not just kind of the normal stuff, right? So anything that's going to draw a
Right.
lot of attention and views, I mean, that's at the end of the day what they're trying to accomplish. Same thing with any source on the internet. Is
Yeah.
it truly a source that's educational, or is it a source that they're trying to, at the end of the day, buy this product or something of that nature?
Right. Right.
And so yeah, we're kind of in that ballpark, right?
Sure.
My goal is education. Hopefully through this process, we have clients that if they hear and listen to me for a while and think, yeah, it might be a good fit, let's talk to them. That's great. That's kind of what we like to do. But to me, that I'm not trying to sell anything, right? I'm not going to,
Right.
flash up a here, buy this, course at the end of the podcast or something of that nature. That's not the goal, right? The goal is
Right.
so you
Right.
hear me, my views, my understanding, and approach to different things, and to give true education on how these different things work from my perspective. And that's the
Yep.
key, is understanding people's different perspective, and then finding somebody that you're comfortable with, but understanding what the end goal is too.
Yeah. No, that's a great point. I mean, we put up calls to actions. I make calls to actions on every episode to say, hey, if you need help, but we're not trying to
Absolutely.
hit you over the head and say, buy Phil's course and you'll be a millionaire kind of thing. There's none of that involved
Yeah.
and whatnot. And not, hey, if that's what you're looking for, that's fine. Right. So just
Right.
understand the intent. So our intent is to bring you information and hopefully, provide you with a couple of useful nuggets of stuff. And we get some videos that get very few views, and we get some videos that get thousands of views. And so it just kind of all depends on the content sometimes. And so therefore
Right.
it's like, hey, just whatever, is resonating with you, that's great. Then take that information, internalize it a little bit, and then reach out to someone locally, hopefully wherever you live or whatever the case is, or even not locally, because advisors can help people all across the country,
Yep.
and just talk with someone. Now have a real conversation back and forth about your specific situation. Say, well, you know what? I do need to talk about risk a little bit more, or I do need to talk about Social Security maximization a little bit more, or I do need to talk about an annuity or whatever it might be. But now you're at least
Right.
armed with some information and you feel like, hey, I know this person a little bit better. Maybe they're a good fit for me. That's all it's designed to do. So just know the intent of what you're searching, I guess, and researching online. So,
Yep. I was
you
gonna
go
say
ahead.
the internet's a wonderful thing. There's a lot of information. That's the good and the bad, right? Because you can
Right.
unfortunately confuse yourself and just get overwhelmed too. So
Yeah.
it's kind of you got to balance it out, right? Find somebody that I don't want to say tickles your ear and tells you exactly what you want to hear, because you can find that too.
Oh,
So, and
yeah.
I always tell my clients, look, I'm not here to be your friend, which, I mean, I'm friends with a lot of my clients. Don't take that the wrong way. But my goal first is to tell you the truth. And this is your retirement. I don't want to, paint it all rosy for you if it's not going to be rosy, or, paint you the
Yeah.
wrong picture. Let's make sure we've got a good understanding. And if it's heading in the wrong direction, and maybe because you're overspending or whatever the case is, let's have that discussion
Yeah.
up front. I'm not going to not have that discussion because, I want to have that rosy picture for you. But at the end of the
Yeah.
day, there has to be that honesty that you share with somebody. So anyways, I mean, I
Yeah.
guess the point with the internet is there's so much information that you can find somebody that's going to tell you exactly what you want. But again, back to, well,
Sure.
what are they trying to accomplish then? What's the goal
Yeah.
in this whole thing?
The Tax Smart Retiree is your comprehensive guide to mastering tax efficiency for a flourishing retirement. You will find indispensable advice and actionable strategies designed to enhance tax savings, maximize Social Security benefits, protect against market volatility, and develop a customized retirement plan. To get your free ebook, click the link in the show notes of today's episode and download your copy of The Tax Smart Retiree right now.
And I like that statement too, because that's kind of how we raised, everybody has their thoughts about how to raise children. That's how my wife and I raised our daughter. We'd love to be her friend, and we hope that we have, she's in her late 20s now, and we hope that we do have a good friendly relationship. But our first job was to be her parent. So our job
Absolutely.
was to be her parent first, and then hopefully friends as well. And I think the same kind of thing, that's a great way of thinking about your financial professional or your doctor, even, right? Be my doctor or my financial pro first. And then if we develop a friendly relationship, great. but
Absolutely.
but do
Yep.
your job first, right?
Right.
So that's
Right.
very, very important. Yeah. All right, final one, Phil. I guess the big name status in this country has always been a thing, right? I
Right.
want to have this purse because it's a big name. I want to have this drink in my hand because it's a big name. I want to drive this car because of the name brand or whatever. It's always been something that Americans have done. Maybe people have done in general. I don't know. Maybe I think it feels like a very strong American thing for sure. When you're thinking about your financial situation, are you going to a place because it's a big name and you see it all the time, or is it because it's the right fit for you? And maybe that conversation needs to get drilled down again. If this is questions that advisors hope that investors knew, does that conversation get drilled down to, does the big firm provide me all the things that I want, or can I also get that with a smaller firm where I get a little bit more personalized touch, maybe attention?
Yeah, I mean, at the end of the day, the big box type names, I mean, they have a place. They a lot of them are kind of what rule, so to speak, in the 401k world, right? Because that's how they're designed. It's all at that point about the numbers and masses, and there's not a lot of specifics, and custom tailoring to a client scenario because it's accumulation years. There's not many moving parts that you can change on this side of the equation. When you're working with an advisor, it should be at least a much more customized and bespoke type relationship where you're working with that advisor and they truly understand your scenario. It's not just that cookie cutter. Not to say you might
Right.
get that with some of the big box, but generally not. I mean, it's are you, when you call into one of the big box, if that's your advisor you work with, are you getting whoever picks up the phone that day, right? Or do you have an
Yeah.
advisor you work with that knows you, knows your kids, knows the plan? You've already had the discussion on when you're going to file for Social Security, all these different components beyond just investing. Because investing is
Yeah.
important, but that shouldn't drive the discussion, which a lot of times in these big box firms, that is the discussion, is the investment. It doesn't come back to a plan first. It's more about the investment side, which when we've talked about this over, especially in this series, is yeah, that's key, that's important, but planning first, understand the plan, the strategy first, then look at the investments. And to me, I think that's probably where you're going to see part of the difference in that big box world versus the smaller type firm, because they're more custom and working with the individual investor to their specific scenario. And most of the time, they're going to have the ability to have a broader range of investment options because they're not tied to, well, this is what my national brand offers or says that I can offer my clients.
That's a great point, Phil, because I think if we're talking about things we wish investors knew, I think sometimes people might feel like, oh, it's a smaller firm. They don't have access to all the stuff that the big place has. And it's actually a little bit more of the opposite, because sometimes the big firm
Absolutely.
has a basket of things they're trying to push. They want their nationwide outlets to push, whereas the
Yep.
small boutique firm like yourself, and there's thousands of those across the country, truly have, especially if you're duly licensed, if you can dabble in all of the financial services world, you have the whole smorgasbord available to you, because you are still going through bigger brokerage management firms in order of the custodians, right? So everything is available to you,
Yes.
and I think that's a misnomer. People think, oh, a small
Yeah.
box place doesn't have the resources, but they really do.
I mean, at the end of the day, it's interesting to me when I don't even need to see who the broker, so to speak, is on a statement a lot of times, because I can look at the portfolio and say, well, this is such and such a company, just based on what's in there. And why is that?
Gotcha.
Well, because that firm, this is, I don't want to say what they push, but this is the product basket that they've developed for their advisors to use. And I mean,
Hmm.
that's a whole nother rabbit hole and discussion to get into as to why that's the case, but unfortunately, a lot of times that is a scenario, good or bad. I mean, you have to really dig into it to see. But yeah, as an individual RIA, registered investment advisory firm,
Yeah.
we don't have to. We're not being, beholden to any outside investment firm. Charles Schwab is our custodian, but they don't tell us who we have to invest in or who, what products we can use. They're simply holding those, and they've got a list of products, but I mean, it's a broad list. It's not limiting by any means. So.
Yeah, no, that's a great point. I'm glad we hit that last final one there because that's certainly a very important one. So if you've got questions, you need help, then make sure you're talking with a qualified professional, whether it's a big box, small box, whatever, but definitely get some help. Phil is here to do so, obviously, as always. So check the show notes for description links there on how to get in touch with him. Of course, you can just reach out to him at philstaxhacks.com. The number's been on the screen the entire time for in video form, but all that information, again, is in the show notes. Details of whatever app you're using, Apple, Spotify, of course, YouTube. Don't forget to subscribe to us on any of those platforms or all of those platforms so you can catch future episodes when they come out. We've been doing this for a while, so hopefully we're providing you with some fun, useful nuggets of information, and you're getting some value out of that. So again, thanks for your time. We always appreciate it, and we'll see you next time. We'll be back here with more episodes in December to close out the year on Phil's Tax Hacks and other retirement facts.
Phil?
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.